How to get out of debt. Finding yourself deep in debt can be overwhelming. The good news is, getting out of debt is possible, it just takes a little time. While some debt can be unavoidable, such as a mortgage or car loan, you can and should deal with other unnecessary debt that's causing stress. Once you formulate a plan and stick to it, you could find yourself debt-free and armed with the knowledge to stay that way. Follow these steps to help you get out of debt, remain debt-free in the future and build good credit for the long haul. But before we begin, please subscribe to our YouTube channel for such amazing and informative videos. List everything you owe. Add your monthly loan payments and minimum credit card payments to determine the minimum amount you owe each month. If you're unsure of all the accounts you have open, especially those that might be in collections, you can check your free credit report. It will show what creditors are currently reporting to the credit bureaus, including your most recently reported balances and contact information for the accounts. Your banks and credit card issuers will have the most up-to-date information. The total you come up with is the minimum amount you need to pay every month simply to stay current on your debt. However, if that's all you pay toward your debt on a monthly basis, it will be nearly impossible to pay it all off. Decide how much you can pay each month. Once you've listed out your current debts, make another list that includes all your non-debt monthly expenses, such as groceries, cell phone bill, utilities, gas for your car, rent, entertainment, clothing and so on. Some of these amounts can vary from month to month, so it's a good idea to take the average of several months. For example, to find out your average monthly electricity payment, add up the total from 6 months' worth of bills and then divide the sum by 6. That's your average monthly electricity cost for the past 6 months. This list represents basic expenses that you have to pay every month. Now compare this amount with your monthly income, considering only the money you have left after paying taxes and other salary withholdings, your take-home pay or monthly net income. Subtract these total expenses from your monthly income. If the amount you have left over after paying these necessary bills is less than the amount you need to put toward your debt, you'll need to take action. If the amount left over after paying basic expenses is more than the minimum amount you need to put toward your debt, decide how much additional money you would like to set aside to pay down your debt each month. Remember, the more you can pay above the minimum, the faster you'll be able to pay off your debt. Reduce your interest rates. High interest rates can cause your debt to grow rapidly, especially if you have a lot of credit card debt. When you're paying a lot in interest, it can be difficult to pay off the principal. Here are some common types of higher interest debt and tips for how to reduce the interest you pay on each. Ask the credit card issuer for a lower rate. If you have a good payment history with them and good credit, they may agree to lower your rate for a period of time, or even permanently. Calling your issuer and asking for a lower interest rate costs you nothing and doesn't affect your credit report or credit score. Consider a balance transfer credit card. If you're not able to secure a lower interest rate from your current credit card company, you may be able to transfer outstanding credit card balances to a balance transfer card with a lower or zero interest rate. Credit card companies often offer promotional rates for a limited period in exchange for you transferring a balance from an existing card to a new one. You'll need to meet the balance transfer card company's qualifications. And you'll probably need to pay a transfer fee of around 3% of the balance you're transferring. Look into a debt consolidation loan. This option can be another way to lower your interest rates because loans of this type typically charge lower interest than credit cards. While certain types of student loans can have fairly low interest rates, if your student loans are older, your rates may be higher. Additionally, if you have a high principal, the interest can quickly add up. Depending on your income and the type of student loan you have, you may be able to apply for an income-driven repayment plan on studentloan.gov that will lower your monthly payment. You must be current on your student loan debt to qualify, but you could reduce your monthly payment without incurring a penalty or harming your credit score. You may also be able to obtain a debt consolidation loan if you have more than one student loan. Consolidating multiple student loans, which you can also apply for through studentloan.gov, will allow you to have a single monthly payment at a fixed interest rate that's based on the average of the interest rates on the loans you're consolidating. Pay your bills on time each month. Paying all your bills on time every month is one of the single best things you can do for your credit. Take any steps necessary to ensure you remember to pay your bills. You can set up automatic payments or payment reminders through your bank to ensure you never miss a payment. If you find you're having trouble juggling all your bills and keeping up with payments, a debt consolidation loan or a debt management plan, mentioned above, could help. But you don't need professional help to create your own plan for managing debt. Put extra money toward the debt with the highest interest rate. In the long run, this will reduce the total amount of interest you pay. Put extra money toward the credit card or debt with the smallest balance. You'll be able to pay it off quickly, reducing the total number of accounts you have to deal with and giving yourself the mental boost of successfully eliminating part of your debt, though you'll pay more interest in the long run than if you were to pay off debt with the highest interest rate first. Deal with any debts in collections. Bringing collection accounts current can help reduce their negative impact on your credit, which is a good reason to put it at the top of your to-do list. Plus, reducing calls from debt collectors can help relieve some of the stress of being in debt. Be diligent moving forward. As you work to pay down your current debts, it's important not to undermine your hard work by taking on any new debt. Avoid the temptation to use a personal loan or balance transfer card to consolidate credit card debt unless you're extremely diligent about not using the card. Once you've paid off the balance, or only charge what you know you can pay off every month. Each time you successfully pay off a debt, put the extra money you freed up toward paying off more of your other debts. In months where you make more money than anticipated, or your expenses are less than expected, make the extra money work harder for you by putting it toward additional payments on your debt. Sometimes debt is just too much and you may fear you'll never be able to repay everything you owe. You do have some last resort options, such as getting a debt management plan or declaring bankruptcy. Declaring bankruptcy is one of the most harmful circumstances for your credit, and it should only be a last resort. Depending on the type of bankruptcy you declare, the negative information will remain on your credit report for 7 to 10 years. You may either have all your debts eliminated or have to agree to a plan to repay at least part of your debt. If your debt management plan isn't working and you're thinking about declaring bankruptcy, you might first consider getting a debt consolidation loan to help streamline your payments and lower your interest rates. Check out these Experian partner loans offering debt consolidation loans with competitive annual percentage rates, APRs. If you like the content of the video, please give it a thumbs up and comment down your thoughts on this. Want more amazing videos? Subscribe to our channel and get more fantastic videos to watch. Thanks for watching till end.